All right, welcome everyone to the Trade Finds and Adjustments for Thursday morning, the 12th of September. My name is Kevin Hurley, and I will be here with you today. We only have 12 people, kind of a small group, but that is okay. Just as a heads up, Smile Direct Club opens up at $20.55 per share in the market debut after pricing its IPO at $23. So it's obviously significantly down, over 10% from where it thought it was going to open, which is going to go over why I'm not looking at a trade today. But my question is why? Why would I be not willing to open a trade today? Is it because I'm scared? Why would I not be willing to open a trade today? The market is too volatile. So in all honesty, if I was to look at the market being too volatile, I would most likely go to the VIX. And I'm going to tell you the VIX right now is down at 14. Probably heading back to 12. So, no, that is not the reason. Why would I not be willing to do a trade today? Interesting you're saying it that way. Too much uncertainty. So if we're going to say that, please tell me what's the difference between uncertainty and volatility? That's kind of funny. I don't see a whole lot of people speaking up, and we now have 13 people. So what's the difference between uncertainty and volatility? They kind of sound like the same thing to me. But I think they are extremely different. Too much uncertainty, i.e., too much headline risk. Could I say that by way of uncertainty? So what's the difference between uncertainty and volatility? Volatility, for me, are big swings in the market pre or post market with no understanding of the reasons why. Uncertainty, good thing I can spell so well, huh? Uncertainty are short-term headline risk movements with a direct shorter term reason. So going over today, China meeting with underlings. Two-week tariff hold off because want to appease China. don't want to appease China. Who and what are we going to use for leverage? All of this has been coming out all this morning, which makes, I'm going to use the Dow. I should use the SPX, but let's use the Dow. Dow Jones Industrial Average, Dow Jones Industrial Average. Which makes our market look like that. And if I could, pre-market was way up here, up 200 points, slowly falling down. Hey, we're doing it to appease them. Hey, there's a Bloomberg report out. Oh, it's not true. Hey, but we could use some of that for leverage. And our day looks like a cursive R or a W. It looks really difficult and hard to understand. With all the news, I can be an education. And for education purposes, I can put out a trade. Or a smart individual would say, you know what? I'm looking for a better entry point. So if I can go ahead and put this out here, real traders / investors look for a high probability, high success rate for placing trades. We don't just place a trade because the education we sold dictates a trade twice a week. You need to be smarter than that. So what made my decision? Well, part of it was the Dow today. Part of it was the fact it was up so high before, and then it came falling back down. Part of it is because I'm sitting on an S&P that's up 0.37. I'm sitting at a 0.47 return. Part of it is because I'm looking at performance. Disney, Visa, and Apple are all moving up. Under Armour's moving up. I like what I see from core holdings. Or as I go down to Baidu and Facebook, Boeing, they're not down as much. So I'll be honest with you, I feel like I can sit through a day like today, that I don't have to go find something. Earlier, I had my chart up. And I took a look at the Dow. And as I look at the Dow, I'm going to use the highlighter. The very top, we're approaching an overbought scenario where it looks like it's flattening out. And last time it flattened out, it went down. Time before, it flattened out and went up. But it bounced off of overbought and headed back down. I don't like the price action today. We're getting a little overextended on the MACD down there. Separation between the two. And I usually always have it in here, and I didn't set it up today. My old Williams percent R. Overextended. Institutions have bought too much. So as I look at the Dow, which really isn't an important index, it's just a traditional index, I don't like what I'm seeing. The problem is the S&P 500 looks eerily similar. I don't like what I see on the indexes. Well, let's look at the NASDAQ. Maybe the NASDAQ's going to change my mind. Doesn't look as bad on the RSI. Doesn't look as bad on the MACD. Williams percent R in today's price action, creating a doji, which usually means a reversal in direction. So I might take a look at an account and say if I'm in some spread trades or in some positions that maybe aren't moving my way, maybe it's time to try to take a little bit of profit. Bank of America, I did everything I could to sell off 20 contracts at a break even. Baidu, not quite profitable, so I'll probably hang on to it. Disney calls, slightly profitable, but it's moving my way today. Ford, slightly profitable today, but I'm not profitable overall. Facebook, you know, I'm actually profitable on Facebook. All righty, I should be back. Sorry about that, guys. Crying out loud. What a bugger. You guys can hear me okay? I am back audio-wise. Someone type in that you can hear me. Someone say, hey, you're there. Thank you, Lee. Thank you, Lance. All righty here. So getting back to what I was trying to do, might not be a bad idea to take some more profitable positions off the table. 100% return on this position. Might not be a bad idea to preview it and to close the order out. Take a profit. If I was to look overall at the group, I'd be just looking at some positions to say, hey, is it time to maybe take a profit here? Apple's still moving up, doing okay there. Have some calls I could look at, but it's moving okay. I do need to consider taking some profits off the January, no, those are covered calls, off of the leap calls that are available. Boeing, I said Baidu. Let's take a look at Baidu. Baidu, we really need to get more up to 115. Do have some that are profitable, but 115 is what we're looking at. Nothing to take off there. Disney has some leaps in it, but none that are significantly profitable. You know, $3. Probably looking at a great end of the year, so I'm not looking at taking anything off here. Those naked puts, though, are doing really good. The September 130s, those are probably Keeves' idea there. Almost have $1 there, so, you know, you've taken 80% of the profit. Might be a pretty interesting position here to see if you could get out with 23 cents to set that position and run it on through. Under Armour looks good. A lot of shares moving up there. Visa has some leaps in it. $18 you can take off for 24, 9 take off for 10. These are a little upside down. Shares look good though. Not a bad position to be there. So in all honesty, not a whole lot that I see that that worries me right now. And I feel comfortable where positions are at. If anything, I'm looking possibly to add some protection for the next drop down. Where's Schlumberger at? Oil's kind of getting beat up a little bit. I may let that one go just another day. Like to get called out on those covered calls. Pretty amazing Micron. Got some puts on those just because it was up at that $50 mark, but things look good. So the short answer is, in all honesty, don't feel like you have to push a trade. Don't feel like, oh, you know, I've got to do this, got to do that. Any thoughts or comments? Any thoughts or comments on what I just showed you? Anyone agree? Anyone agree or anyone disagree? Anyone gonna type? There we go. Kevin, I like what you say, and I like that you don't force trades that lose us money. Thank you. And that's obviously, that's what we're looking at. There's a big difference between doing it for education and doing it in real life. And that's why, obviously, you're going to see us making comments or doing things just a little bit differently than you might see in education. With that said, does anyone have any trading ideas? Does anyone have any trading ideas that they're looking at? Or any trading ideas that have caught their attention? Smile Direct Club. All right, so let me SDC. The Smile Direct Club. It's just how would I do this one? Ida, Sawyers, give me a quick second. I would never trade an IPO. It just doesn't make sense. There's no track record behind it that for me justifies trading an IPO. Smile Direct Club, brand new. Looking at today. this is what you're trading. You're trading that. You're trading that for volume. No financials behind it. I'm just not interested. In all honesty, it's something I would look 6 months down the road where we have some kind of track record that validates where the company might be going. So that's what I would be looking at or looking to follow through with. And difficult. That doesn't tell me anything. In fact, if anything, short term, you're looking at a pennant where there's a breakout, and apparently the breakout is looking more towards the downside. So again, IPOs, not something I would be trading, not something I'd look to be trading. There's not enough information. It really would be a gamble. And my fiduciary responsibilities don't let me gamble with clientele's money. I seem to lose more than I gain on protective puts. Please consider a teaching session on puts, i.e. strike price greets in the future. Definitely, Ida. But usually when I hear you're losing more money on the puts than maybe you're gaining, that might happen through an earnings event. But if it happens constantly, you are probably not trading a stock that has enough movement or volatility in it. So if you're always losing money or losing more on your puts than you're gaining, definitely. And it could be that you're kind of putting them on wrong, that you're doing way in the money, which gives up all your profits. Maybe you're putting too far out in time through two earnings events where you can't gain as much. But yes, I will definitely look at that. Look at doing something here in the near future for an explanation on puts. In fact, maybe I'll do that because we're going to go into an earnings season coming up. Maybe I'll do that next Monday. In fact, Keeve, I can see you're here. Let's think about that and think about how to go over an explanation of puts and how or why you'd want to use puts for next week. Next Monday. That'll be a Monday night session. Any other questions or comments? If not, I'm glad to have you guys around today. I'll work on getting this posted tonight. But I guess what I'm trying to go with, if the setup doesn't look good, don't force the issue. If you don't have an ideal entry point, why the hell would you put something on just to put something on? That's my only beef I have with educations. When education says, oh, we're going to put on X amount of trades every day, blah, 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 I scratch my head and I say, why would you do that to someone's portfolio? Why would you care so much about selling an education to not care about people that might be putting real money to work on those type of trades? So with that said, guys, have a wonderful weekend. I'll look forward to seeing you next Monday. And I will look to doing a protective put education on next Monday's class, and I'll have it posted. Lee, Verizon is running high. Would you expect them to fall? Definitely. Really, Verizon runs, though, on new business. And Verizon also kind of gotten beat up over the last year. Although it's back up to 60. Little overbought, yes. I think they run too far too fast, which means nothing more than too many people have piled in. its range is really more between, if I can take this out, really more between, 50 and 57. Let's see if I can pull this out 5 years. Not a bad looking chart, but I do remember 2016, 40 to 47 back and forth. It usually is a pretty good collar trading position at that. With that said, though, Lee, I don't know what the breakout reason is for Verizon. So before I blindly just make a comment, I wonder what Verizon is doing that's giving them a breakout, unless it's the new Apple iPhones. Not a bring strategy to Dish. 5G? I don't know. In all honesty, there could be some 5G phones, but I think areas are not set up for 5G yet. So for example, Apple will probably come up with a 5G phone next September-ish or later, but Salt Lake City won't be ready for 5G for at least 3 to 5 years. So it'll be interesting. Would I expect? Yes, I definitely expect them to fall as they're on 5-year highs. Could be an all-time high, but yes, if I was to look at Verizon purely on a technical basis, overbought, they will most likely come back down and probably test that 57.50 range. But I don't know what's moving them, Elise. I don't have a good answer for you there. All right, guys. Hey, appreciate you being here today. Great questions. Hopefully this was helpful for you. I'll look forward to seeing you next Monday night, looking at some type of protective put strategy on our session. Keith, please make sure I remember that. And you guys take care. Have a good one. Talk to you next week. Bye-bye.